Welcome to the Investment Banking Institute. My name is Jeff Noland. I'm the instructor for the Dallas and Houston locations for IBI. This is a training video and should be used as a supplement to all the in-course training materials. If you have any questions on the course materials, please ask your instructor. Otherwise, we look forward to seeing you in class. Thank you. All right, welcome everybody to the Investment Banking Institute. I'm Jeff Noland, the instructor for Dallas and the Houston locations. Looking forward to having you all here. So my background, I am currently working for a firm called Breyer Capital. It's a private debt fund out of Houston. I run the Dallas office. I'm the company's executive vice president and CFO. Prior to that, I was working in commercial and residential real estate development, investment management for a firm in Southern California called Newport Coast Capital. Was handling a lot of the acquisitions work. So a lot of financial modeling, a lot of valuation in the real estate context, a lot of transaction work in the real estate context as well. Prior to that, I was working for an economic and litigation services firm called Charles River Associates. We would basically put together economic models for damages analyses in connection with litigation. Company A sues Company B. They would hire us to figure out what are the damages. We put together some extensive models to do that. Prior to business school, worked for a boutique investment bank called Howard Lawson & Company. It was later acquired by Fleet. That was in Philadelphia. Was doing a lot of mergers and acquisitions advisory work, valuation opinions, fairness opinions, strategic analyses, that type of thing. Education-wise, MBA from the Wharton School, bachelor's in finance from Miami of Ohio. And I've basically been doing the skills that I've been using the skills that we're going to be covering here basically for the last 15 years in many different walks of life, whether in commercial real estate or directly in investment banking. There's a high degree of applicability across different industries. And I think that's something that I really want to emphasize. No matter where you go in your career, I think you'll be able to find ways to use these skills going forward. So, let's real quickly want to review the syllabus just so everybody's on the same page with what we're going to be covering here. You've probably seen this. If not on the website, you've probably at least seen the handout. The course will run over 4 weeks, Saturday and Sunday. We are off next week for Thanksgiving, so don't show up here. I'm not going to be here. It'll be pretty lonely. Today what we're going to do, as I mentioned before, today will be an introduction section. We're going to cover financial statements. For those of you who have taken finance and accounting classes, there probably will be some remedial aspects to that. Cover the income statement, the balance sheet, the cash flow. We're going to talk about SEC filings. We're going to give an overview of the investment banking, the financial services industry. We're going to talk about spreading financial statements, that is entering financial data from a financial statement into Excel. You'll get a homework assignment on that. And then we'll talk about something called non-recurring add-backs, which is a really key component of financial statement analysis. All right, so that'll take us pretty much the full time today. Tomorrow when we come back, we're going to start talking about valuation. All right, we're going to cover the valuation topic actually over 2 full classes. Tomorrow we'll get about halfway through, then we'll finish up, not next Saturday, but 2 Saturdays from now. All right, as part of valuation, obviously we'll give an intro like we do of everything. Why are we doing this? Why are we covering it? All right, so we'll talk about why we value companies. We'll introduce some key concepts like equity value or market capitalization, market value of equity. Contrast that with a concept called enterprise value. And then we're going to spend a lot of time on the 3 commonly used valuation methodologies that would get used in banking: comparable public companies, precedent transactions, and discounted cash flow. Most of you probably, if you've taken a finance course, you've seen DCF. But most folks, even if you're in a business school or an MBA program, most programs I've found don't spend a whole lot of time on comparable companies and precedent transactions. All right, so we'll go through those. You'll have several different homework assignments. And by the end of that, we'll have a complete integrated valuation model similar to what you'd build if you were working in banking. Class 4, we're going to talk about what everyone seems to have a high degree of interest in. We're going to be building a financial model. All right, we're going to be building what we call an integrated cash flow model. Basically, income statement, balance sheet, cash flow projections. We'll teach you how to build a debt schedule as part of that. All right, and we'll teach you how to link those up. We'll teach you a lot of Excel shortcuts. That's where you can really get good on financial modeling, good working in Excel, learning those shortcuts and memorizing them. So we'll go through a number of those. As part of that, we'll teach you how to do revolver modeling, really kind of the keystone to link a model all together. Classes 5 and 6, similar to valuation, we'll cover leveraged buyouts over 2 classes, 2 class sessions. We're going to build a leveraged buyout model basically from start to finish in class, just like we'll build a financial model from start to finish in class 4. So we'll cover all the basics, what is an LBO, why are they done. We'll talk about all the components of a common LBO model, sources and uses of cash, transaction summaries, pro forma balance sheets. All right, we'll link those back into a financial model. We'll talk about capital structure, leverage, those types of topics. And then we'll finally calculate returns on different pieces of debt, returns on equity that get put into that get injected into the transaction. All right, so again, that'll take 2 full class sessions. By the time we're done with the second one, we'll have a fully integrated LBO model. Then you'll get some homework. You can go build one on your own as well. Okay, that'll be classes 5 and 6. I don't know why this is doing this. Class 7, we're going to start off by talking about M&A. We're going to be building a mergers and acquisitions model in class. So one company buys another company. What is the effect on the buyer's earnings per share? What does that combined company look like from an income statement and balance sheet standpoint? We're going to be building one of those in class and talking about a number of issues in connection with that, from multiples paid to control issues. We'll teach you how to calculate exchange ratios, all those things that you've probably read about in the Wall Street Journal anytime you read about an M&A deal. All right, you'll understand those. We'll build this in class. All right, and at the end of the day, we'll be able to figure out, is this transaction accretive or dilutive to the buyer's earnings per share? That'll take us probably about half of that class 7. The other half of class 7, we'll talk about the M&A sale process. All right, kind of along the same topics of M&A, we'll talk about what does an investment banker do when they've been engaged to sell the company, what are all the steps that they take along the way to kind of package and market that company for sale. All right, then class 8, we're going to start off with the concept of pitching. Pitching is the process by which investment banks go out and sell their own products and services to clients, the process by which they win business. All right, so if you get into investment banking, chances are you'll spend somewhere around half of your time working as part of that pitch process. So we want you to have a good understanding of what goes on there and all the things that get contained in something called a pitch book. All right. And then finally, the last part of class 8, we'll talk about recruiting. All right, so anybody who's looking for a job, that's going to be, I think, a really helpful session. If you are looking for a job, I wouldn't wait until that class 8 to enlist my help. If you've got a resume that you'd like to have reviewed, shoot that over to me via email. I'll take a look at that. There's a woman in our New York office who handles resume reviews as well. All right, so if you've got a resume, you want to have it looked at. If you've got questions on the recruiting process, don't wait until class 8. Let's start now. Okay, but we'll talk about all the things you might expect if you go into an interview in investment banking, common interview questions, both qualitative and quantitative. That class actually functions like a course review, and that we'll be reviewing a lot of the key quantitative concepts that we cover all along the way. We'll talk about tips for interviews, tips for resumes, those types of things. Okay, so that's kind of the roadmap from here to the end of class. Does anybody have any questions on this? All right, great. Let's start. I'm going to go back to the lecture slides here. And we're going to start off by talking, what I want to do is give a real kind of general overview of investment banking, private equity, hedge funds, how those types of institutions relate to one another, how an investment bank is typically set up, the things an investment bank provides to its clients in the way of products and services. And I'll say that the hard copy slides you have, probably the first 2 or 3 slides may differ a little bit from what I'm going to present on the screen. I like to just have a couple additional slides in there. I'll get back onto basically the same order of slides in a moment. All right. First thing I want to do is really kind of just throw out some terminology that you might hear out there and make a distinction between something we call the buy side of the financial services industry and the sell side. And the reason I do this is even when I first got into banking, I was a little confused by that. I'd always hear, well, working on the sell side now, I'm going over to the buy side, and it's easy to kind of confuse that in the general industry context with buy side or sell side on a transaction. Right? If you have a transaction, it's pretty easy to figure out who's the buyer, who's the seller, right? But in the general industry context, these terms get used really to differentiate between groups that are putting capital into companies, buy-side investors such as private equity folks, or maybe lenders, maybe mezzanine funds, debt funds. Anyone who's injecting capital into companies would be on what we consider the buy side. All right? And when we say sell side, we're really talking about investment banks, groups that are hired to be intermediaries to help companies raise capital, to help companies market their business or divisions for sale, that type of thing. All right? So when I throw these terms around, I want to make sure everybody understands these. And I think it'll be useful as you get out and start doing more in the industry yourself. So let's talk a little bit more about investment banks. Again, when we're talking about investment banks, we're talking about the sell side of the industry. And specifically, I really want to focus on what do investment banks do and what is the difference between what we call a bulge bracket investment bank and a boutique investment bank. And really the major difference between the bulge brackets, groups like Goldman Sachs or Morgan Stanley, Citi, what used to be Bear Stearns, what used to be Lehman Brothers. The difference between what they do and what a boutique does really has to do with the depth and breadth of products and services that they offer. All right, so a bulge bracket bank would offer what we call a full line of products and services. Boutique banks tend to be a little more focused. They might also be smaller. In many cases, they are smaller as well. But they're really more focused on providing typically advisory services. Okay, we'll talk more about that in a minute. When we talk about the bulge brackets, though, bulge bracket investment banks do a number of different things, all right, in order to be considered full-service investment banks. So some of the things they might do, I'm going to put a number of these up on the board because I'm going to refer back to them as we go forward. But probably an obvious thing that most of these banks do is M&A, mergers and acquisitions. Okay, helping companies sell themselves, helping companies sell maybe a division of their business, maybe a collection of different assets. All right, but basically it's an advisory function that investment banker provides to help value the company, to help identify to whom we would want to market this company for sale, and then to execute on that marketing process. At the end of the day, the goal there is to get obviously an offer, to get a purchase and sale agreement signed, to get a deal closed. Pretty straightforward, right? What else do investment banks do? What else does Goldman Sachs do, for example?
Issue shares.
Capital markets, right? They help companies perhaps issue stock through what we would call an IPO, an initial public offering. Right, that would probably take place within an equity capital markets group of Goldman Sachs. They might also, as part of that capital markets function, they might help companies issue debt as well. All right, sell bonds, maybe raise debt through a private placement, that type of thing, and we'd call that debt capital markets. What else?
Financial restructuring.
Absolutely, that's a big one these days. And getting over to the topic of recruiting for a moment, if you're looking for jobs, I would be looking at jobs in restructuring. Okay, so find the restructuring groups of investment banks. There are other restructuring firms out there in the industry that focus solely on helping companies restructure their balance sheet, maybe exchange debt for equity, maybe go and negotiate with creditors to try and reduce the balance of debt. All right, helping companies avoid bankruptcy, or once a company is in bankruptcy, helping them navigate it and get out. Very, very busy right now. It's a great time to be in restructuring. Most of the banks, if they're hiring, that's probably where they're doing the bulk of their hiring right now. All right, so that's a real good place to focus, real good place to get a lot of different experience too. Kind of understanding not just the financial side, but also understanding a company on a kind of a holistic level from an operations standpoint as well. All right, what else? What else does Goldman or Morgan Stanley or one of those banks do?
How about merchant banking?
Merchant banking, sure, that might be that might be something that they do. Basically, oftentimes doing some investment on their own account, buying companies possibly. It's probably a smaller part of what Goldman or one of those groups do. But yes, merchant banking would be one thing. We got a lot of other things up here as well, so I'll put some of these up. Leveraged finance, often referred to as LevFin. Okay, basically helping private equity firms raise a package of debt to go out and complete a leveraged buyout transaction. All right. Not very busy right now. Not a lot of LBOs going on right now. Starting to come back. You're starting to read a little more activity in the leveraged buyout space. But right now, when the debt capital markets are shut down as they are now, makes it very challenging for private equity firms to go out and do new business because they really depend on being able to access those debt markets. All right. So not surprisingly, LevFin bankers probably not as busy as they were a couple years ago. They'll come back. All of these things out there in the financial services industry, they will come back. The capital markets are getting more friendly, more receptive to new deals. It's just going to probably take some time. Okay, what else? What else do we have up here? Okay, sometimes we might have industry groups. All right, that is Goldman Sachs or Morgan Stanley or one of those investment banks might have practices within the bank that focus solely on a particular industry, telecom, healthcare, etc. And that varies from bank to bank. But basically, these folks would really keep close tabs on an industry, maintain a lot of relationships in that industry, try and position themselves to win business when it comes about in that industry. And what else? A lot of other things. What else might you read about Goldman Sachs or one of these groups doing? What about wealth management? Private wealth management. We'll call it PWM up here. That's sometimes an abbreviation you see. All right, and I'm using these abbreviations, by the way, because that's how people tend to talk in the industry, so you get used to seeing these abbreviations or different terminology. Okay, what else? What about research? Who knows what I mean when I say research? I know some folks have a desire to get into that or might already work in it, so what does a research analyst do?
Basically just valuing companies.
Mm-hmm. They're covering the stock usually of particular companies and basically making recommendations as to whether they think that stock is over or undervalued. Typically issue recommendations like buy, sell, or hold the stock. Right? Tomorrow when we get into valuation, we're actually going to review some equity research reports. But that is one service that investment banks provide, usually provided, and those research reports are sold to institutional clients. All right, as a way to make money. What else?
They lend money.
Pardon?
They lend money.
Sometimes they may. You know, the distinction between commercial banks and investment banks kind of went away in the mid-90s when they repealed Glass-Steagall. So some of them may lend money. They might provide, you know, in the case of a group like Citigroup, they might be providing loans directly. Absolutely.
Trading, prime brokerage.
Yeah, exactly. Those are some of the ones I was looking for. So let's start with something called sales and trading. All right, this is by and large, this and something called proprietary trading, or what we refer to as prop trading. This is really where the banks got in trouble in the last couple years. All right, they packaged up a lot of securities. In some cases, with proprietary trading, they were buying and selling those securities with their own funds or for their own account. They got caught with a lot of quote-unquote toxic assets, all right, that really put them into some difficulties. All right, sales and trading, prop trading, those are two things that a lot of the bulge bracket banks engage in. You mentioned prime brokerage as well, you know, basically helping usually hedge fund or institutional clients execute trades for the most part. Okay, anything else? Does anybody see anything that we've left off the list? I think we've got pretty much everything here. All right. Any idea why I've put one set on the left and the other on the right? It's not because I ran out of room over there. I did that intentionally. Who's heard of the concept of a Chinese wall or firewall? Right. Basically something that separates two different sides of the organization to avoid conflicts of interest. Okay? The reason for that is folks on this left side, folks who are in M&A, folks who are in capital markets, folks who are in restructuring groups, dealing directly with companies, oftentimes getting a lot of non-public information, all right, as a matter of course in doing their job. It's tough to be an M&A banker if you don't have inside access to the company. All right, a lot of things that M&A banker is getting access to has not been announced to the public markets. So folks on this side of the wall focus a lot on private information. We call it the private side of the house. Folks on this side, probably the most obvious group is folks who are in the research side of the business are focusing mostly on public information. That is information that's been disclosed to the public markets. Anytime a company has an earnings release call,